Morning, everybody. It's Monday, the 30th of November. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, gents.
Morning
Good
all.
morning.
How are we?
All good,
Fully
thanks.
refreshed.
Yeah,
Miserable weekend, wasn't it?
yeah,
Jesus.
it was pretty much. Weather-wise, it was okay down here, but just
What was
the
it? No, it's
feeling of
shocking up here.
just being locked down is just, yeah,
It was
boring.
like
Not that much is going to change when we come out of it on 2nd, is it?
yeah, Wednesday. Shops are
Yeah,
open again
Wednesday.
on Wednesday. Well, not open. Open for takeaway, aren't they? But
Yeah,
there's a
fun, eh?
lot of unhappy people in Sheffield with regards to the Tier 2 London posse.
Yeah.
Well, how are we getting away with it down here?
Yeah, exactly. Outrage.
Yeah. Okay. Well, onto the markets then. Obviously, it was pretty quiet last week because we had Thanksgiving on Thursday, and then we had Black Friday on Friday, where that's half day for the US market. So volumes typically very low around that time of year because people tend to take the 2 days off, get the Christmas shopping done. And looking at markets today, they're
Jumpy.
looking at a bit all over the place. It's obviously the last day of the month as well, so we can get a
Thank
bit
you.
of window dressing. It's been a pretty strong month all in all for indices, so I imagine people will be keen to secure some profits and make sure that their P&L sheets look pretty rosy for the month of November. So that may play into what we see today on the markets. In terms of news, the Prime Minister is expected to try and reach a deal within the coming days with regards to Brexit. We've heard that all before, so let's not hold our breath about that. In terms of the vaccine, that all seems to be pushing ahead quite nicely, and we're getting closer and closer to the big rollout for that, hopefully. I haven't seen much on the numbers for COVID over the weekend. I think in the UK the numbers have dropped. The R numbers certainly down as a result of this lockdown that we've had over the last month, which, as we said, ends on Wednesday. Anything else catching your eye over the weekend, gents, on the news front?
Oil.
Okay.
OPEC have got, well, they tried to agree the output cut over the weekend, basically before the meeting starts today. I think it starts at 10 o'clock this morning, and they couldn't come to any sort of conclusion. I think it's mainly, let's have a look at the email actually before I misquote. But if they don't come to an agreement this week, then there's 19 million barrels a day, or 1.9 million barrels a day will be started again, or output will start again on 1.9 million barrels. So basically, it's United Arab Emirates and Kazakhstan were opposed to Russia's supply hike. So there's all loads of infighting basically. And I've got quite a decent chart on oil, and I think it'll be quite interesting this week, because obviously we've seen a surge in oil prices because of the halted output. So if it goes, if they switch the tap back on, then they could see quite an aggressive turnaround, I think, in oil.
Right. Well, let's have a look at that then. If you've got the chart
Yeah,
ready to go on that.
I'm looking at this. This is an 8-hour chart. It might as well be a daily, I suppose. But it's this is that strong move up from beginning of this month. Like Joe says, from the 30th today, and we've got a nice tight, which I've just buggered up there. Got a nice tight confluence area here. What have I done there? Sorry, I'm gonna have to rewrite that one. Which makes a butterfly formation. Just there at 224. So between 224 and 168. So 168 of this leg, 224 of this leg is a butterfly formation. So we've seen a bit of a dip down at, this morning or overnight on that news. I'm wondering whether or not we might just move higher and clip this resistance zone and then move to the downside. One currency that have a tendency to track oil quite well, obviously Canadian dollar, but also New Zealand dollar. And I know I talked about this last week, but a lot of the New Zealand crosses are showing topping formations. So I think this is very interesting this week. Shall I waffle on about FX for a little bit?
Yeah, you might as
why
well
not?
as you're there.
Dollar index, again, is an interesting point. I quite like this. We've got a butterfly formation here. So I think we could see a stalling in price action. What I don't like about this is that all the other time frames, like the daily time frame, is still pointing to lower levels. So I think we might get a little correction higher in the dollar index, but I don't think it's going to be anything that it's not a trend reversal, put it that way, I don't think. And if you look at this is euro dollar. This is the daily chart. We're not far off breaking to new highs. So we've got 120.008 was this swing high from the 1st of September of this year. And then we've had this choppy price action, and then we look like we're going to attack that. We've got through 88.6 quite cleanly. And again, I can't really see much indication of a change of trend in there at the moment. There was a confluence area here, 119.75, which has been broken this morning. Sterling dollar is not looking as strong. I think this reverse trend line resistance, if it holds, which currently comes in around about 133.67, I think if that holds, then that offers quite a decent risk reward trade setup, because you've got the measure move target down here, which is at 129.35, and you could place your stop above the previous swing highs. So on a risk reward basis, that looks quite nice. Again, dollar Swiss, we've got quite a decent area around about 90 the figure, 90.004. That forms a bat pattern. So again, limited selling in the dollar. Dollar yen's had a good hike up this morning. I thought that would push lower, and I thought indices were looking like they were set for a move to the downside, but that's starting to move up. Really, for me, it's in no man's zone. 105.20 is a decent sell area, and down here is a decent buy area. So at the moment, I think you're just going to get chopped up in between. 78.6% is holding for dollar CAD, and again, I think you just got to focus on that oil chart really if you're going to play this one today. And Aussie dollar, there was some news out overnight, I think, with regards to Australian dollar, some sentiment figures from ANZ, which is the Australian New Zealand Bank, and I think they were quite negative, because we have seen a little bit of a dip lower in Aussie and New Zealand dollar, just basically close to these previous swing highs. I think as long as that holds and we get a bit of risk off, then that could be quite a decent setup. Not really got much in the way of euro sterling. Just looking at one short-term charts, we've seen a reaction at this fib confluence area, which was at 89.90, but I think we could push up to here, and again, that offers quite a decent sell zone, because you put your stop above the 261.8%, and you target new swing lows, which are around about 88.20. So 125%, 127% of the whole formation. That's me, really. I'll talk about New Zealand dollar when we get to gun to the head.
Okay, lovely. Steve, it's a bit choppy on the old indices to start the day. Looks like, well, we was off to a bit of a stinker on the futures overnight, and but first thing this morning we seem to be reversing a lot of that. What can you see in the charts? Anything interesting?
No, I think we finished very strongly, obviously, at the end of last week. Looking at the Nasdaq to start with, obviously that it's the highest close. We've basically is at the highest weekly close ever. Looks like it. All-time highs we are. So expected to get off to a good start this morning, and as you say, we had a little bit of a setback early on, but that initial move seems to be reversing somewhat. I think the US market's obviously a little bit different to the European counterparts, and I expect that when they come in this afternoon after they get over their hangover from the celebrations last week, then we can expect to sort of like see them kicking on. Now, dogs might bark. Now the postman's coming up, but I'll mute it quite quickly if they do.
Great professionalism there.
Can't get away with it. We got the footsie.
It's like all our households.
Really, what got off to a real big bit of a stinker to start with. What looked like the DAX was under a lot of pressure. It even took out the swing low from Friday and from Wednesday, but sort of reacted from 13,225, and then we've had a really nice reversal back up. I actually managed to sort of like early this morning thinking we could have a bit of a continuation, especially after seeing this shooting star on the hourly chart. This was formed last night in sort of like Sunday night trading on this chart, and then a decent sell-off. So I think maybe a retest, but there is potential for the European indices to remain under pressure. Obviously there's news that Topshop and the Arcadia Group could be going into liquidation. That's Sir Philip Green's group, so that will have an impact potentially on the UK market. Although a lot of the UK market, the FTSE 100 is made up of US based shares, so may only have a minor impact. On the CAC, again, similar sort of picture. Had this initial sell-off. I think we go with the flow. If it does break down again, I think we go with it, but potentially it's very difficult to argue against these very strong equity indice markets. And we're sort of into December, so potentially I think we get the normal Santa rally. That's what it feels like, and then maybe the wake-up call happens over the new year. And into January, we probably get the sell-off, which normally happens when markets are performing in a weird sort of way. Everything looks gloomy on the economic front, but they seem to keep making these all-time highs. I think you have the Santa Valley, and then once that's out of the way, it's you'll get the economy looking like it's recovering, and maybe the indices will take a hit then. That's what it feels like. Yeah, that's me. I mean, gold for me was maybe just the only other one that I've sort of like been following quite closely. And obviously we go to this, I know it's a messy looking chart, but it did actually hit the level we were talking about last week, 1763. We managed to get down to there this morning. It stalled at 1765 on this chart, but that's a 50% retracement from the move from the 16th of March. So yeah, so 50%. It's a normal corrective move, so we don't have to panic about the gold at all. But I think you're getting into down at these levels. Yeah, exactly. Yeah, 16. Yeah, I suppose it does. For me, I'm now starting to look at the potential for it to move down to the 61.8% fib, which is also an extension level as well. That's coming in around about 1680 level. So maybe plenty more on the downside for gold. Again, I'll remain slightly bearish, looking to sell into rallies. But we've been talking about this for a while. It's a bit clearer on this chart. You can see the sort of like the level it held, the 1850 level. We said if it breaks here, it could have a decent move lower, and it's happened. And we've now hit this swing high back in May and reacted quite nicely though this morning. So potential for a little bit of positive move into the early trade maybe of this week, but still under pressure.
Okay, excellent. Okay, so let's have a very, very quick look at the gun to the head stuff from Friday, because there is nothing really positive to say about it. We had 3 trades and we had 3 stop outs. So we are on a right stinker of a run at the moment. As you can see here on the P&L chart, we desperately need to turn this around because it's starting to hurt a little bit. So who's going to get us a win today? Ian, you've got one lined
Yeah,
up on New Zealand dollar, did you say?
yeah. I've got. I'm just talking about that OPEC meeting as well. So this is live squawk that we subscribe to. Some OPEC members, including Russia, insisting on a gradual monthly increase from January. So that should be negative for oil. So bring me on to this basically. What I do like on the cipher patterns is if you can get some sort of confluence or correlation, I should say, over different time frames. Now, if you look to this chart, this is the weekly chart. We've got a zone here, but this is, I think, quite important. It's the 224 extension, which is only used in symmetrical patterns. It's not used in Elliott wave and stuff like that. And that's at 70.52. And if we go to, this was actually surpassed. You've got another pattern here, but the zone is here, so it has been broken. Got 261.8% up there at 70.80. So again, when you think about these setups, 70.52 with a stop above 70.80, using that 224 and the 261.8% offers quite good risk reward levels. But this is the one that I like, which is just a short-term time frame. It's an hourly chart. We've made a butterfly formation. We now look, if we sort of break it down onto 30 minutes or whatever, we now look like we might make a head and shoulders. So left shoulder, head, right shoulder. So I'm going to sell this and stop waffling. Stop above the height. So I'm getting short at 70.28, targeting 69.59 with a stop at 70.47.
Excellent. What are we looking for there? 3.5R?
3.5R.
Beautiful. Steve, you got one ready?
No, I'll wait for you, mate. That's
okay,
all right.
I'm taking a look at cable today. I liked what Ian had to say about that potentially having a turnaround. I'm just looking at the hourly chart here, and I've got a short-term uptrend which is broken. So we saw this move down here, possibly looking at a retest today. We did gap higher on the futures overnight. So in terms of a very short-term target, I'd be looking for that gap to be filled down at 33.05. That's not enough for from an R perspective this morning. That only give me 1R, so I'm looking for an extension of that below down to some support I've got here at 32.40. So I'm selling now at 33.31. Stop loss above the high that we've just seen over the last couple of hours at 33.62. Targeting, as I say, down to that 32.40 level, which will be 3R from here. That's my trade for today. Steve, did that give you enough time?
Yeah, that did. Yeah, it also gave me enough reason to buy euro sterling. So
yeah, I like that's my other option.
Yeah, so I think there is good potential here if we sort of look at this bottom here and this bottom here. A break of
pennant on that or flag on that this morning on the
yeah,
hourly.
yeah, potentially, and but I think could be a double bottom here on the 4-hour chart. A break above. I'd rather see a break of 90.05 to get long, but as it's a gun to head, we've got to do it now. So let's get long at 89.87. We'll have the stop quite tight, 89.57. And we'll go for a, well, if we're looking from a Fibonacci perspective, maybe we'll look for a, what about 50%? We've been at 38%. We'll go for 90.27. How about that? Oh, no, it's closer to 90.47. What is that? Is that just 2 to 1? Yeah, it is. Just 2 to 1.
We'll take it.
We'll take it. We'll take anything. 0.2 to 1 I'll take. So yeah, that's me buying euro sterling at 89.87, targeting 90.47, stop at 89.57. Yeah, happy with that.
Excellent. Let's see how they go. Okay, news-wise today, what have we got to look out for? We've got German CPI at 1 p.m. We've got Chicago PMI at 2:45. We've then got US pending home sales at 3. And later tonight at 11:30, we've got Japanese unemployment rate for October. Anything else you got on the calendar, Ian?
Yeah, loads. We've got some low tier money supply figures out the UK. OPEC meeting starts in 54 minutes, but it sounds like they're already leaking stuff out of that. ECB Lagarde is on at 10:30. You've already mentioned those CPI figures, haven't you?
I have, yeah.
And I think there's another speaker, Bank of England's. I'm not even going to try and say that. Tenreyro.
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 Is that right?
Tenreyro.
Sounds like you two are making it up.
We make most things up, so it doesn't really matter. And then yen figures overnight, and RBA. Don't forget RBA at 3:30 in the morning.
Yeah, careful if you've got any IC positions going in overnight then.
Yeah.
Okay, well, let's hope we get off to a good start this week with the gun to the head ideas. Good luck if you are trading. Be careful, it is month end, so there could be some chop as a result, and there are some speakers throughout the day which aren't listed on our blog this morning, but Ian's mentioned, so keep an eye out for those. Unless there's anything else, gents, we can wrap it up there.
Yeah,
all good.
Lovely. All good. Good luck.
Great. Okay, have a great day. Speak to you all tomorrow.
Enjoy.
Cheers.
Bye-bye.
Bye.